Rand Merchant Bank reported financial results yesterday. It was for the period to the end of June. The company's normalized earnings dropped by 17% to 5.8 billion rand. That was mostly due to credit provisions of around 3.3 billion rand. The company's ROE dropped by 5 percentage points to 16%. With me is James Formby, he's the Chief Executive. James, thank you so much for joining me. I know banks don't like red numbers, always, especially on the income statement. But I don't think these numbers are really comparable to last year. There are a lot of accounting funnies in there, like the provisions. How do you think stakeholders should interpret it?
The way I think of these numbers is to start, I look at the pre-provision operating profit, because IFRS 9, it's an accounting term we're all getting familiar with, has really had a big impact on these numbers. At a pre-provisioning level, we're actually up 14%. And I think that speaks to the underlying health of RMB and the various businesses within the bank. The difference between plus 14 and the minus 17 that you talked about is entirely due to the provisions that we've had to take. Some of them against the credit book. We lend about 320 billion rand to corporates and institutions in South Africa. So 2.3 of it was to that. To top provisions up there, and 1 billion was to provisioning against our private equity portfolios, where we've got some investments which have, we believe, their market values fallen below their book value. On the private equity portfolio, we've still got unrealized profit, which we don't record in the income statement, of 3.3 billion on the portfolio in total. So it's really just certain investments there that we've just had to pick out and provide or impair their value. When it comes to the loan book, this is very much a story about IFRS 9 requires you to look forward and to look at the macro assumptions and say what might happen. So this isn't about non-performing loans, because they are more or less the same as they were last year. This is just about looking forward and saying we're in a different macro world, therefore top up provisions. And that's what that 2.3 billion, it sounds a big number, but that's what it's largely about. So 1.7 of the 2.3 is about forward-looking assumptions.
Yeah, and it has a massive impact on the net result. But the question is, how realistic is that provision? Can you link it now to what you're seeing on the non-performing loan side?
What this is trying to do is say what might happen in the future. And so it's a whole lot of assumptions about the macro outlook, which are hard to calibrate. So we think it's tough medicine, it's bitter medicine, but medicine's good for you, and it's good for us and for our stakeholders to top up on these kind of provisions. We, to be honest, don't know what will happen. They're all specific situations with and many of them are in the press already. So we think it's better to be prudent and to make sure we've got adequate provisions. As I said, these are actually businesses that are paying their loans. They are current, they're performing, but in time, because the economy's been so affected, they might start to battle.
Yeah, obviously you'll try to be as conservative as you can. If you don't realize those losses next year, you will write it back and the profitability will look a lot more healthy.
Yes.
Tell us about your customers. How much relief did you actually extend to your clients?
From March, where we got hit quite quickly with the crisis, a lot of engagement with our customers. The total number is just around 40 billion rand. Some of that was new money, for clients that didn't have facilities or needed to dramatically increase facilities. So about 11 of that 40 was actual fresh money, and the balance was either covenant waivers, payment holidays, other relaxations to give our clients the time and space to trade through what we all know has been a pretty tough time.
40 billion, that sounds like a big number.
I think it is. Certainly now our teams have been working hard to get to the right answers with our clients and to help. I suppose one also needs to bear in mind that we are in the more resilient end of the economy. These are very big corporates. They do have buffers. So, on a 320 billion advances base, 40 is significant. It's the most we've ever had to deal with. But most of our clients actually were okay. We stayed talking to them, kept close, but they were actually okay.
Let's talk about the underlying divisions within RMB. The markets division did pretty well. What went right for them?
So markets was up 21%. We were pleased with that. I guess a couple of things. Our Nigerian business has been growing, and the links between foreign investors in and out of Nigeria, our client base has been growing nicely there. So we saw good growth there, probably up until the sort of COVID period, because things changed for an oil-producing economy. As COVID arrived, there was massive market dislocation, and that kind of volatility is normally good for a markets business, provided that you have very good risk controls. And I think we were disciplined in the way we facilitated flows for our clients. And so we were able to actually, the team was able to do very well there.
How did the African operations perform?
So Africa was a good story for us in the current year. Profits went up 9%. We were really pleased with how resilient the businesses were, particularly the in-country businesses. Some of it's obviously cross-border, but we were very pleased with that result. It's now about 25% of RMB's total profit, and it's been growing a percent or two every single year now for many years. And over 5 years, we've grown 20% per annum in our rest of Africa portfolio.
On the CIB side?
The CIB side, which is investment banking, corporate transactional banking, almost all of that story, because the underlying businesses did fine. Our net interest income line was up. We had good debt capital markets business, some nice equity capital markets business as some clients repaired their balance sheet. So the underlying business was fine, and it was pretty much all the declines. The business was down in totality around 20%. That was entirely due to these provisions that we've been talking about. They hit that business quite hard.
Then the big question is, you are in a new financial year. I don't know if anybody knows how we will come out of this crisis, but what do you expect? How do you think Rand Merchant Bank will get through this?
The critical thing for us is to emerge stronger from this. That's why we have said we are going to accrete capital. We are going to protect and grow the capital that the bank has in order to serve our clients going forward. And we've done that, and we'll continue to do that. So I think we are seeing a gradual return to normality, as some kind of new normality. So we're seeing conditions improve. But remember that we only had 3 months of COVID in last year's numbers. So this year we'll definitely have, I don't know how many months of it. We're all figuring that out, but at least 6 months of some impact. So we expect the outlook to be tough still. But we definitely believe that we've passed the worst, and it's now time to reopen the economy, to get South Africa moving, and we're able to help our clients do that.
James, thanks, and good luck with your big task. Hopefully we get through this much better than many people think.
Cool. Thank you, Ray. Thanks very much.
That was James Formby. He's the Chief Executive of Rand Merchant Bank.